certainty versus uncertainty. In this point, Mark Douglas explores the common inclination of traders to seek certainty and predictability in the financial markets, even though the market itself is inherently uncertain. Here's a more detailed explanation. Desire for certainty. Many traders enter the market with a desire for certainty and predictability. They want to know with confidence whether a trade will be profitable or not before entering it. This desire for certainty can lead to frustration and disappointment when the market doesn't behave as expected. Market as inherently uncertain. Douglas argues that the financial markets are characterized by uncertainty and randomness, especially in the short term. Prices are influenced by a multitude of factors, including economic data, geopolitical events, and human emotions, making it impossible to predict with absolute certainty how they will move in the immediate future. Accepting uncertainty. Successful traders understand and accept this inherent uncertainty. Instead of seeking guarantees, they focus on managing risk and adapting to changing market conditions. They embrace uncertainty as a fundamental aspect of trading. Flexibility and adaptation. Traders who recognize the uncertainty of the market are more flexible in their approach. They are willing to adjust their strategies and adapt to new information or changing market dynamics rather than rigidly sticking to a preconceived notion of how the market should behave. Risk management. Accepting uncertainty is closely tied to effective risk management. Traders who understand that outcomes are uncertain are more likely to implement risk management techniques, such as setting stop-loss orders and diversifying their portfolios to protect their capital. Long-term perspective. By focusing on managing uncertainty and embracing it as part of the trading process, traders can maintain a long-term perspective. They understand that individual trades may have uncertain outcomes, but over a series of trades, their well-constructed strategies can provide a statistical edge. In summary, the third point in Chapter 1 highlights the contrast between traders' desire for certainty and the market's inherent uncertainty. Successful traders acknowledge and accept this uncertainty, which allows them to approach trading with a more adaptive mindset. They prioritize risk management and make decisions based on probabilities.